sometimes people forget real estate sector is cyclical, and sometimes some gurus invent there will be no more cycle, but cycle in real estate happens every time. And as you know, the period is 5 years or 10 years, but basically it's like in the Bible, 7 years of good market, 7 years of bad market. This happened again. And so if you overlap to this sinusoid graph, you know, a stable range of activities crossing this. This is how I remember these 20 years. By the way, I spent 40 years in the market, so I'm older than business Simu. And in this range, we can insert three things we must do, you know, whenever the cycle is. Asset rotation, we need every day to decide to sell something probably will become obsolete, and to try to buy things will enjoy a fantastic season in the future. This is the first activity, a permanent activity, even during, you know, bad market moments. The second one is investing CapEx to keep the buildings in perfect maintenance. And these days, you know, fighting the ESG obsolescence. Today, obsolescence is mostly linked to ESG criteria. As you know, the criteria are evolving every day. So is another permanent activity we need to perform whenever the cycle. And the third activity is to adapt the commercial real estate, by far more than the residential one, adapt this infrastructure, at the end is an infrastructure, to adapt to the new way of working, new way of shopping, new way of doing business, and so on. No? Obviously, in the last 8 months, 9 months, we are being in a sort of too early to buy, too late to sell phase. So we are decreasing our commitment in investments, and we are accumulating resources for, you know, probably a better hunting season next year. On the other side, we are even increasing our CapEx activities and cleaning of portfolio opportunities for the reason I said before. So this is the attitude we have. As far as the different sectors are concerned, we have still logistics in good shape. The sector suffered just a bit of repricing, but at the end, there is a structural underlying trend linked to the redesigning of the European logistic supply chain, and is also linked to the fact that, in any case, the logistic of today is by far more modern than in the past and super interconnected with, you know, big data and so on. So logistics remains solid. Residential remains as usual, is a permanent sector, very deep, low volatility, but in this moment is less sexy because the returns in residential are lower, and when you have smelling of recession in the real economy, you know, rents must be moderate, otherwise you kill the people. And obviously people face higher problems to take a mortgage and so on. So offices in this moment are, as far as we are concerned, we have 98% of occupancy, and you know, all the rents are indexed. So I don't see problems in the fundamental. I perceive headwinds in the, you know, opinion of generalist investor and so on. And as usual, they are transferring some, you know, situations in US, in New York in particular, and that's, you know, journalists and supposed experts start saying everywhere it will be the same. Exactly what they did with the shopping center, no? 7 years ago, they said, okay, all the shopping center will close. They forgot Europe is 1/5 of the density of shopping center per inhabitants. They forget the, you know, how the cities are, you know, in US or in Europe. In Europe, you take 20 years to obtain a permit. In your US, you take 2 days. and people abandon a city, moving in another state, and obviously it's not the situation. For sure, again, offices and retail needs to adapt because the behaviors are changing, generations are changing, and so on. We are preparing these days a pan-European fund. As you know, Generali Real Estate is managing 9 pan-European funds. We are preparing a pan-European funds for hotelery, a 4 or 5 stars hotel. Obviously, it's like all the others, is open to third-party capitals, but we start with 11 Generali properties, so we move from 800 million above. We are very successful in private debt real estate because we introduced 6 years ago a new strategy. We are at fund number 2, and the number 3 is in preparation. So today, if you ask me where I can invest in your products, I would propose first private debt, second logistic, and ready to invest in hotelery. As far as offices and retail are concerned, we are very solid and long term. So if you want to protect a part of your savings for your grandson, okay, you can invest also in this. But today, if you read too many newspapers, you don't invest in offices and retail. What has been evident as all the generalist investors who entered in real estate in the last 3 years, because all the other investment, govies and fixed income, proved to be dry, are abandoning the sector. So when you look at the picture, and PwC probably saying that the volumes of transaction in real estate are collapsing, but basically going back to normality, we are abandoning a bubble moment and we are entering in a normal period. Obviously, it seems a disaster, but the bubble was the pathology, not the today's situation. Honestly speaking, having many years of experience, when I've seen asset manager specialized in digital passive management of liquid equities entering in real estate, I said, what are you doing here, guys? This is a direct investment. We need a lot of competencies and people. You come from the digital passive management of stock exchange shares, but they enter. Now they are going away because they understand it's a super difficult activity and so on. So this is the moment. So the challenge today is first to convince a lot of stakeholder and investor it's not the case to panic. The second one is to remain convinced of what you are convinced, because after many days listening to crazy things, at some point you start thinking that Ukraine invaded Russia and not the opposite, no? Because it's something like this. And honestly speaking, is also to keep the teams motivated. And as far as financial risk or portfolio designing, what you have done is done. You have no way today to change your leverage or to change. If you try to change your portfolio picture or your loan to value, you destroy a lot of value, that's for sure. So it's a moment of resilience, as we said before. No?